Yeah, hi, Gyanshekar. Can you hear me?
Yes, Jay. I think you've blocked my video, or you have to make it happen.
Yeah, we're doing it.
Okay. Okay. Uh,
Yeah, hi, Gyanshekar. Can you now on your video?
yeah.
Yeah, it's coming right. So it's for me. Yeah, can you all see me? No, right?
डिस्कनेक्ट कर दिया मेरे अब मुझे भी कनेक्ट कर रहे हो तुम
Yeah, I'm connecting in 2 minutes. Yeah. Just one.
Yep.
Can you hear me now?
Yes, yes.
Oh, okay, perfect. So sorry, folks. Just some technical issues today. But yeah, we'll get started now. Hi, Jay. Hi, Nansikar. How are you?
Wonderful. Thank you.
Thank you. Thank you so much for joining us today and taking out time to do this for us. So,
Yep.
folks, Can please you hear me welcome now? our guest for
Yes,
today.
yes.
Oh, okay, perfect. So sorry for technical issues today. But yeah, we'll get started now. Hi, Jay. Hi, Nancy. So let me do a quick introduction for our guest for today. So Mr. Gnansekar is currently the head of Comtrades Research, an organization which specializes in commodity research and advisory to market participants in India and overseas, having over 20 years of trading experience. He works closely with mostly agribusinesses, base metals and precious metals business corporates in India and across the globe, helping them in managing their commodity and currency price risk. He was recently awarded the Best Market Analyst for the category Commodity Markets Bullion by then Finance Minister of India and then President of India, Mr. Pranab Mukherjee. So, welcome to our webinar.
Pleasure is all mine. Thank you.
So before we get started, folks, just some housekeeping. So we will take questions from you, and but we'll be doing that towards the end of the session. So if you have any questions, please put it in the questions box, and we will make sure that we answer them for you. So over to you now, Jay.
Yeah. Yeah, I hope I'm audible. Yeah. So, hello, good evening, everyone. So, welcome to Dhan webinar. So, through our webinars, all these months, we have been trying to bring insights on various aspects of markets so that our viewers become better traders and investors. So, today we bring another important aspect, which is commodities. And to discuss this, I have with me Mr. Gyan Shekhar, who is a veteran in commodities market. So we both have been part of various shows on business television and have been taking initiatives to develop commodities market. Mr. Gyan Shekhar has more than 30 years of experience into commodities. He is one of the few guys in India, who understands commodities inside out, and he has been in commodities business before even MCX started their operations in India. So before we deep dive into understanding how commodities can help you in becoming a successful equity trader and investor, I would like to hear from Mr. Gyan Shekhar about his journey in financial markets. And so how did you started tracking commodities? So if you can share your journey with our viewers.
Thank you, Jay. Thank you, friends. It's a pleasure to be here, and it's really nice to see people interested in commodities. In fact, back 10, 15 years back, even this crowd is difficult. Very few handful of people were interested because they didn't understand these markets well. That was the main reason. But I think now, with a lot of awareness, I think more people are coming into these markets. Well, my journey in commodities began in the equities markets. Actually, it was just an accident that I got into commodities. But I started off my career in a magazine called Dalal Street Journal, which I think is still there. So I was more into selling financial information to marketplace as a database, as a software. That was back in the 90s. So my interest grew in the markets. My interest grew in analyzing these markets. Though I was selling the products, I could see a handful of traders, handful of intermediaries using certain techniques which others were not. So that intrigued me, and that increased my interest in analyzing these markets. And then I joined subsequently Wall Street Journal, Dow Jones, which owns Wall Street Journal. That is where I sort of, got exposure into commodities in a much bigger way. I could meet a lot of corporates, I could meet a lot of traders who were using this information that was provided in Dow Jones and Reuters in trading in these commodities physically, not in futures, physically, and accessing global exchanges and how to analyze that for their business needs. And that increased my curiosity, and then I started writing a couple of columns on my own in about certain commodities like gold, palm oil, cotton, and that had a global appeal. Actually, a lot of global readers were there for that column, and became quite prominent. So that's how my interest in commodities began in a big way. And then I started working with many corporates who were into trading in these commodities. And that was the time I joined the bank. It's called the Bank of Nova Scotia. It's a Canadian bank, and essentially they were into bullion in a big way. So we were doing the currencies for that, and a lot of trading exposure again in commodities in the bank and in foreign exchange both, and that helped me sort of get inroads into the commodities markets overall in the country. And I realized that the agri and non-agri markets are two different animals completely, and to sort of manage them, you need understanding in these markets. But I must tell you that I didn't do any special courses, or I didn't do anything much. I was mostly following the price. The price action was more important, which is what I would like to convey to people who are interested, who are thinking probably commodities is too difficult, and simply if you start tracking the price for some time, you can understand what all is happening in the price, what is influencing the price over a period of time, not immediately. Then one can easily get to know what are the factors that influence the price, and you will understand the fundamentals that influence these markets, and automatically you'll come to know all the fundamentals that are involved. So the best and simple way of getting into commodity markets is simply start tracking the price and questioning what is happening to the price. Why is it going up? Why is it coming down? So that way, you can make a good beginning, and that's the way to start basically. Otherwise, you can go around reading books, you can go around attending programs, but ultimately, the way to right way to do it is to start tracking the price. So after that, sort of joined a team which MCX was very much involved. That was the time when MCX started, and they wanted people who had expertise in these markets to come and give knowledge and awareness to market participants. And then we were doing various programs and helping out many of these top intermediaries who are there today, set up the research desk, set up the trading desks, and make them understand what commodity trading is all about. So that process happened back in 2005 or so. And from there, our company Conference Research has been providing research information about commodity markets and how to trade successfully in these commodity markets. The risk management, most importantly, the risk management. And we have a product called Game Changers in moneycontrol.com. I'm sure many would have gone through it. There we provide regular strategies and trading calls on commodity markets, but largely positional calls. We don't concentrate much on intraday. So that's got a wide readership all over the country, and there are many subscribers for that. And I would encourage you to look at the site. So that's how this whole thing began, Ajay.
Yeah, that's wonderful, Gyanshekar. So, now we also know this, right? And a lot of our viewers also might be knowing this, is globally commodities market is much, much bigger than equities market, right? So in India, it's not the case, क्योंकि इंडिया में आप देखो तो equities market का volumes बहुत बड़ा है commodities से. But globally ये उल्टा है. I think 3-4 times bigger than equities market. So इंडिया में भी अगर आप देखे हो तो I think almost more than 40% of sectors in Nifty are commodity related or dependent. तो इसमें there are certain sectors which are directly linked, like you have energy, you have metals, you have cement, and there are certain sectors which have indirect linkage to commodities, like FMCG, and all those sectors. So generally what happens that people who are into equities trading, they generally perceive that कि commodities समझने की ज़रूरत नहीं है because we don't trade in commodities, so what's the point in understanding commodities. But it's very important that any company which is into, say, a company which is into metals, right? So take example of a company like Hindalco, or a company which is into steel. So your understanding your earnings, revenues, quarterly results only gives you a half side of the story, because you are analyzing a company, right? You are not analyzing the underlying. Say example, if there is a there is a recession in steel market, so whatsoever Tata Steel does or SAIL does, they will not be able to post a good result, right? So for anybody, it's very very important, if you want to become a good equity trader or good investor, that you should understand the underlying. So what's your thought on this, Mr. Gyanshekar, if you can throw more light on this with your experience?
No, wonderful question, Jay, because this is one thing which I commonly see in the markets also. Not many pay too much attention to commodity prices because it directly doesn't affect equities, but indirectly it affects in a big way. What one has to realize is that you made a nice point initially that the global markets, the commodity markets are much bigger than equities. If you look at the sort of way it is, the way it is designed, is that commodity markets are 10 times the size of equities, forex markets are 10 times the size of commodities, and bond markets are 10 times the size of forex. So it's the fixed income market which is the largest actually, and then comes foreign exchange, and then comes commodity, and then comes equities. Actually, equity is the lowest volume in terms of the overall picture. But here in India, it's different because we don't take the commodity cash market into account. We only look at the futures and the derivative market. So if you actually take into account the cash markets also, we would be probably 100 times bigger than equities already in India. But we are only looking at the F&O and comparing cash and F&O of equity. F&O of commodity against cash and F&O of equities. But the other point that you were talking about is very very important, because the commodity prices are nothing but input for many of these companies. It's a raw material cost. Many of them either import it or buy locally and produce it and make a product and sell in the market. So what results you're seeing are nothing but the sales of these products. But how much is the cost, the raw material cost that goes into making these products is very important. So, most of the commodities that are involved in making these products, they are very volatile. The prices, fluctuate wildly because the commodity markets are like that. So these companies which are basically using these raw material prices and making a product out of it are exposed to this price risk. And their balance sheets and P&L will be badly affected if they don't manage this price risk properly. Most of these nifty companies, have a proper setup of managing this price risk. They have hedging desks, they have commodity hedging desks, and some of them very actively hedge in the overseas exchange, domestic exchange. The ones who don't, they get into big losses, and it gets reflected over time. Maybe if this quarter, if your input price is very high, it will be reflected in the next quarter. So tracking commodity prices are extremely important to understand the profitability of the company going forward, how profitable that particular company will be going forward. So that call can be easily taken if you have a good in-depth knowledge of what's going on in the commodity market. So you cannot ignore that at all. If any equity analyst does that, then it'll be big trouble for that person. So it's extremely important, whether it is metals, whether it is energy, whether it is agriculture. It is imperative that one understands what is the price cycle at any point in time in commodities, because most of these companies, they either use it as an input, or they even produce and sell it overseas. So the commodity prices are extremely important. So it gives an extremely good insight, and you can in fact catch cycles. I remember very well. There are many cycles that we have caught as recent as the recent fall in commodity prices, the risk of inflation. So all that one can take a good call on the equity markets based on the commodity prices in steel, in metals, in energy. In agriculture commodities like cotton, edible oil, all of them can give excellent insight into what a company will go through in the future, and based on that, you can plan your trades in equities.
That's very interesting, Mr. Gyanshekar. Just to add what he's saying is that, say, take for example crude oil, right? So crude oil prices have shot up from, say, almost $75 to close to $120. So we have a direct impact because our petrol diesel prices have gone up. But there are certain industries, like majority of them, say for example paint industry, or say auto industry, right? So the raw material prices have gone up, so you will always find that your auto margins will get reduced. So there are companies which are into auto sector, their sales will dip down because they have to increase the price, or their profitability will go down. Now somebody who is holding a stock like, say, M&M or Maruti, right, they'll find that कि next 1-2 quarter खराब हो रहा है, so क्योंकि आपका profitability नहीं बढ़ रहा है, so you will start having a half cooked story, right, that the company is not doing well. The company may be working at their best efficiency, but lekin the external factor, which is commodity, is impacting. So how, as an investor or trader, if you keep an eye on what's happening on the commodity side, helps you in taking a better investment decision. Because when you see that crude $80 से $120 हो गया, 50% बढ़ गया है, so in coming quarters there is going to be pressure in certain industries like paint industry, right? Somebody is writing on chat as well that crude is bad for plant. Okay, so paint industry बढ़ गया तो Asian paints का raw material expensive हो गया, they can't increase the price, so their margins will shrink, so they may come up with a bad result. So if I'm holding Asian Paints, or if I'm holding Maruti or Tata Motors or M&M, so I can actually take a decision ki should I hold it, should I hedge it, should I hedge my holding against options trade, should I hedge my holdings against selling a future. Again इसका रिवर्स भी ट्रू है. अगर आप स्टक हो इक्विटीज पोजीशन पे, राइट, एंड देयर इज वॉर, कुछ अनसर्टेन हो रहा है, तो आपको पता है कि मेटल प्राइसेस नीचे जाएगा. If you are holding metals, you can, and if you don't want to sell it, say example you have Tata Steel, Jindal Steel and Hindalco. So what you can do very well on commodities, you can sell metal index futures. And if your company is into, say, Hindalco, so aluminium prices नीचे जाने वाला है, तो आप aluminium में trade कर सकते हो. So I hope I am able to get into it, right? कि trading both markets, understanding both markets are equally important if you actually want to become a successful trader or investor. So yeah, you want to add something, sir?
No, see, there was a time when you just look at equity markets alone, and each market you look at in isolation. Because I've come through all these phases and I've seen the equity markets develop, and then I've seen the way commodity markets have begun and developed. You're right that in the initial stage, people don't give too much importance to other markets, interrelated markets. Now we're completely interrelated, not only with equities and commodities. Globally, we're interconnected with everything. Any event that happens, affects all asset classes, whether it's equities or commodities or foreign exchange. The entire market is affected. So it's very important to know, that you're globally connected, and the kind of information flows that keep happening from time to time. You should, in fact, as an equity trader, it's very important to know what's happening in the macroeconomic situation in the US and India. So macroeconomy was not something which people really looked at extensively at that point in time. But now you cannot miss out on anything now. If you are a good trader and if you need an edge, uh, you definitely need to track everything. You cannot ignore any market, whether it's commodities or foreign exchange. They're all absolutely interconnected. And that interconnectedness is what makes things also easier to predict. If we know the impact of a certain information, then you can have trades in all the markets, and not just in equities alone.
Correct, correct, yeah. So there's one more, general perception, or I would rather say myth, is commodities is very complex, right? So I'm not able to understand it. Equities बहुत simple है. I can understand this. So what's your take on that? Do you think commodities is so complex?
No, on the contrary, it's actually much simpler than equities. Initially, when I could look at a P&L or a balance sheet, it would be so confusing, the kind of jargons that are there. Only a chartered accountant can interpret. But in commodities, you don't need any financial degree or anything like that. You can simply start becoming a research analyst without any problem by just observing certain key information that keeps coming from time to time. So the information in commodities is more generic in nature, unlike equities where it's a bit complex. Understanding these numbers, crunching them in the PSP and P, all that. I would since I've gone through both the markets, I would say that commodity is much simpler. And if you just understand certain crucial elements, for example, if you're looking at any commodity, the most important thing is the demand and supply. And then you have to understand the seasonality of that commodity. So if these are the three critical factors that one needs to pay attention to if you're in commodities. If you do that and fairly get a good understanding over time, then the predictability of any move is much more in commodities compared to equities, because the commodity market is seasonal in nature. There are certain seasons where the demand will be high, the supply will be more, and markets tend to react to this demand and supply in a more predictable manner. So my own sense is commodities is definitely more predictable and easier to trade compared to equities. The only problem is at least in India, is that the market is just from 9 to 3, 9 to 4. And the commodity markets operate all the way from morning 9 to 11 in the night. So that could be a bit of a anomaly for many of these equity traders, that they have to sit and watch it all the way till 11 in the night. But over time, I have realized that if you keep your stop losses, if you keep your orders, and if you're watching the markets very closely, you don't actually need to sit in front of the screen and keep watching it. You simply keep all these orders, simply have a proper system in place, then it becomes much easier to trade. And I think commodities any day is much more simpler than equities, and it's definitely a myth, like you said earlier. And there are easier ways to do it.
Yeah, that's right. So for any beginner, right, understanding companies management, understanding results, understanding whether the company's cash flows are correct or not. These are pretty complex things, right? And for commodities, like there's one more thing which is called an intrinsic value. Now, if you buy a 1 kg of coffee, right, you know that the 1 kg of coffee costs something. It cannot become zero. So there is intrinsic value attached, and people can correlate to it. And it's as you said, right? It's seasonal. It has got a demand supply, so it's easier to understand now in terms of seasonality, right? Take for example, crude oil. So there are driving seasons, when crude oil demand in US goes up. So it's pretty simple to understand that if crude oil supplies are not increasing, and during driving season the demand will go up. So there is all probability that price may increase. Right, same thing goes during winters, right? When demand for natural gas and crude oil shoots up because of extreme winters, and people use it for heating their homes in Western countries. So that at that time demand increases. So if somebody keeps an eye on these, datas, I think it becomes pretty simple. As you rightly said, right, the stop loss for any trading has to be there. So if you trade with certain discipline, your probability of understanding equities market as well as probabilities of trading successfully in commodities goes much higher. By the way, I'm not recommending someone to trade in natural gas or any of the equities. It's just for the illustration purpose, we are discussing this. Now, Mr. Kansekar, see, where do you see, right, the reasons that, say Nifty started in 1995, 96, and MCX or commodities market started, I think, in 2003. But the F&O business or F&O volumes have shot up, multiple times, whereas commodities exchanges, they have not been able to catch up to it. So is it the product innovation you feel is the reason, or is it anything else?
See, actually, the problem is the policy, the government policies, and they started putting CTT, and right from that time, I think the interest has gone down, and also tinkering with commodity contracts from time to time. See, the government does when I say government, I think the ministry involved in giving sanction to these commodity contracts. They do all the homework and then they approve and give permission to launch the contract. Then suddenly, when something happens to the price, they use the commodity futures contract as a scapegoat to control prices, which doesn't happen. We all know, despite banning many of the contracts, we still the price of commodities continue to increase. So that is a big dampener, because many corporates, the ones who I very closely work with, they all had good positions in many of these domestic commodity futures. But the minute it was removed, then all of them have to again go back to the international markets to hedge their prices. And many of them couldn't because of the limit issues and all that. So that policy flip-flop of giving permission to see, if you strongly feel that the futures market is disrupting the cash markets, then please don't give permission. So let it just be. But if you give a permission for a contract, it becomes widely accepted. A lot of market participants start trading in it, and suddenly you remove it, then it just takes off the confidence completely. So for all of them to come back, it takes a long time again. So this constant removing of contract and then again reinstating, that I think has been one of the biggest challenges in the domestic market. So that has resulted in loss of confidence, I must say, among market participants. For retail, it's okay because there are so many options for them. But for corporates, especially the ones who are accessing the physical markets, are using it for hedging, using it for timing the market. So for them, it's become a very, very tough period. And these policy initiatives, I think, are one of the main reasons for this market, which is not yet developed in a full way. Otherwise, look at the US, look at the way in which prices move. Even there, you have such huge volatility. But it doesn't mean they go and ban the contracts. They don't do that. I've never seen any contract being banned in the US or in the West. The first time it happened in nickel in LME because it just overshot, and it's still not been reinstated.
Yes,
But
yes.
in India, it's very common to see any agri contract coming and having good volumes, and suddenly in the next couple of years, it's not there. So right from pulses to oil seeds, so there's a whole lot of commodities that have lost credibility among the market participants. So I would only think the think tank of the decision makers. I think they should clearly understand that it's not futures which are disrupting the cash markets. The cash markets themselves are like that.
Yeah,
In
yeah.
fact, it helps in mitigating price risk.
That's right. That's right. So most of these things are happening on the agri commodity side, but on if you see for on international commodities, exchanges have been taking a lot of new initiatives. Earlier there used to be only futures as an instrument. Now we have options. Going forward, we are also going to have options on indices, right? So just for the viewers' information, in commodities you have metal index, you have energy index, and you have bullion index. So if you are interested only to trade metals or only energy or only gold and silver, rather than trading individually, you can have an index for that. So that's and coming times, I think there will be a lot of depth coming, as that FPIs are also likely to get permission. So that will also help us in developing this markets going forward. uh, Mr. Gyanshekar, says somebody who is listening to this webinar and wants to get into commodities, and somebody who is a beginner. So, which particular, any specific commodity you would recommend for a beginner to start with? And if so, how one should approach the markets?
I think I'll take cues from what you just mentioned some time back. Please don't look at natural gas at all. Uh, so start off with gold and silver because it's widely looked at, and there's a lot of information on it, both on the internet, both on even on certain platforms. One can easily access that and understand what's going on. So the most important part of a beginner getting into commodity markets is to understand how the market works, especially gold and silver, because gold and silver always don't move based on demand and supply. It's largely to do with interconnected markets like foreign exchange. What happens to the dollar impacts gold and silver in a very big way. Simply because both gold and silver are traded in dollars physically globally, and therefore, if the dollar strength is more, then the commodity prices start going down because the ability of a person to buy gold and silver starts going down as the dollar strengthens, and the vice versa. So this inverse correlation between the dollar and precious metals can be sort of easily predicted if you follow the dollar very closely. So what one needs to do when they're starting is understanding the price movement of the dollar as well as gold and silver. So these are the two crucial elements. And when you do that, you will automatically see what impacts the gold price every day, what impacts the silver price every day. And you start questioning why it's gone up, why it's come down, what are the factors. Over a period of time, you would have fairly understood most of the factors that affect gold. Despite all that, there will be new factors that will come in. But it's easier to understand gold and silver markets compared to other markets, which to some extent are influenced by demand supply metrics. So I would say that to start with, please look at bullion markets and start looking at the price very closely.
Yeah, that's good. So I think there's a question in chat as well. Somebody is asking why you are not recommending natural gas to trade.
Uh, See, in the US markets, first of all, we need to understand that there is in fact the funds which play a huge role in many of these commodities, the speculative funds. But the best part is that in US, the CFTC, which is the governing body for commodities, has very clearly segregated. If suppose I buy natural gas, then I need to clearly say whether it is as a commercial I'm buying or as a non-commercial. Meaning, is it for speculative purpose or is it for any underlying exposure? So there is a difference between the speculator and the person who is from the industry when in the US. Here it is not, in India it's not. Now, natural gas specifically is extremely volatile because it's illiquid even in the US. Forget about India. And that illiquid nature makes it way too volatile compared to crude oil. I'm saying that the liquidity that crude oil has, the depth that crude oil market has, natural gas does not. Because it's one of the products of crude. So that makes it extremely volatile. There are certain commodities like that even in agriculture. There's a product called pork belly. Now, pork belly futures are the most volatile in the US after crude and after natural gas. So again, it's purely because of the illiquid condition. So natural gas compared to crude is much more illiquid and the depth is much less. So that makes it susceptible to speculative moves.
Yeah, just to add to that, see, when you are a beginner, right, you need to start with a commodity which is more predictable, which price movements are stable, right? So that's also one of the reasons. Now, say take for example in equities, if you want to start trading futures, nobody will recommend you, a stock which is highly volatile, right? So in the similar fashion, natural gas is one of the most volatile commodities. So if somebody understands commodities well or somebody is a good trader, then only it makes sense for him. अगर आप start करना चाहते हो तो gold, silver, copper could be a better commodity to start. So before we proceed further, I'd also like to invite Naman, who looks after our product. So he can probably share some. Yeah, Shraddha.
Hey, hi. Hi, Naman.
Hey, hi.
So, folks, a quick update and introduction for Naman. So, Naman is our product manager at Dhan, and he looks after the trading products. And he's built some incredible features which will help you trade better in commodity trading. So, Naman, please give us a small demo.
Sure. So let me share my screen here. Can you please allow me to share screen, Shraddha?
Yeah, 1 second.
Yeah. So yeah, my screen is visible, right?
Yes, it is.
Okay, so this is the Dhan website's homepage. So Dhan has a 5 trading products, one Dhan mobile app, an options trader app, the web.dhan.co, the Dhan trading website, tradingview.dhan.co. We have collaborated with TradingView and come up with tradingview.dhan.co for trading. And for the tech savvy people, we have open APIs, Dhan HQ. What I'm showing you right now is web product, web.dhan.co. So on the home page itself, you can see you will be able to track your portfolio and today's position with your investment and current value with overall in today's profit and loss. Next, you can navigate to all the segments of trading, whether it is equities, currency, commodities, everything from the home page itself. And there is a dedicated page for all the segments for trading purpose. Next, there is a complete dedicated snapshot of major indices in the market for both NSE and BSE, so that you can track the overall market, how it is working, and a snapshot for your portfolio now. Next, we also have a watch list here. We give you 10 watch lists and you can add up to hundreds of scripts, so you can track up to 1,000 stocks at a time. Along with this 10 watch lists, we also give you invested watch lists. So what is invested watch list? A unique one here. So as and when you get a stock in your demat account, that particular stock will get listed in the invested watch list, and you can track that particular stock from here itself. Apart from that, we also have done FNO watch list, which have some futures and options trading tool like option chain or option summary and future summary page. Next, like while clicking on the equities, ETFs, commodity or currency, you will go to the markets tab. Like let me take you through the commodities. So you will get the list of all the commodities futures, and if you toggle it, you will get the list of options currently active for all the expiries. Okay, from here only you can get the top traded contracts of the options, and you can go to chart or trading view or their information like the company page or script page for it. You can also navigate to option chain from here for all the expiries, or advanced option chain with all the IV, LTP, and volume and open interest analysis. Later on, we'll be adding more Greeks also, either like delta, gamma, vega, everything. We also have something called live market scanner here, where like as and when something like particular condition matches, like for an example, daily, weekly, monthly, or 52-week high or low, or resistance or support has breakout, or upper circuit or lower circuit has been achieved, or some unusual or potential volume has come. So as and when particular thing happen in particular stock, the list of that stock will appear here. It comes in a real time with continuous feed. Similarly, like you can track your portfolio positions, orders. We have some special orders also, like basket orders or SIPs. You can start SIP in particular script, forever order, what the people call as GTT order. We have that forever order, and a very unique one, first in the industry, feature called draft order. So what is draft order? It is similar to how you make a draft for your Gmail. The same thing it is, like you can create a order for yourself, and when the time comes, you can execute them in one tap using this button. Okay, apart from this, we have some like all the popular order types, like market limit trigger, basically a stop loss order, cover and bracket order also we have. We also give you reverse order option. What is reverse order? Basically, if you have a long position in a market and you're scalping, and if you want to exit that long position or want to make short also, so with the one single tap you can reverse your position. So basically, if you are a long like copper future, if you are long one lot long, and if you click on the reverse position, so your two lots of the copper future will sell, and one lot will be for squaring of the long position, and another lot for creating a short. Apart from that, I'll show you, we have a canvas for trading view and chart IQ, and you can trade directly from the charts itself by placing all the orders, and you can go to tradingview.dhan.co. The product I was talking about, we have collaborated with TradingView and come up with this unique like same front end as what the tradingview.com is, and everything is synced with the main Dhan product, like all the watch list, all the basket, all the SIPs, all your settings, even your chart layouts and your work on the charts, everything is synchronized. That's it. Like apart from that, we also have Options Trader app. It is right now live on Play Store and App Store, and we have more trading tools available on the Options Trader app. That is it from my side. If you have any question, I can answer that question.
Also, to add to Naman's points, I have two things to say. So we have a very good news that from Monday onwards, we will be self-clearing members of the exchange. So what that means for Dhan's users is that, you know, the margins that you get on Dhan can be used across all the segments. And one of the best things for commodity traders on Dhan is that you do not need a separate account. You just in one Dhan account, you can trade in all the segments. So we'll proceed to taking the questions now. So you can drop it in the chat or in the Q&A box, and we'll make sure we answer all your queries. So we have one question from Mr. Venkat. He's asking if nickel is illiquid in MCX. So how can we trade in India?
Mr. Gyanshikar, you can answer.
Okay. See, actually, you know, it's better to avoid nickel for the time being, simply because you don't have an international reference price, which is LME nickel. They've banned the contract because there was a huge volatile movement that was seen recently when this Russian war started. Because Russia is, you know, a large producer of nickel. They almost they produce like 6 to 10% of the entire nickel produced. So because of that, the price is just overshot, and LME are not able to reinstate that contract. They're still finding ways to do it. So during this, till that LME contract is reinstated, it is ideally better to avoid nickel. Though based on domestic factors, nickel does move. The moves are extremely speculative. So unless you have a credible international benchmark to reference or to look at, it's ideal to just ignore that for the time being.
Yeah. So it was very liquid a few months back, till few months back. So there was a erratic movement which happened because of that. In international markets it's not active. So now since the reference price has been taken, इसके लिए यहाँ पे MCX में भी price liquidity कम है. So there was one question, Shraddha, which I saw in chat. Says that how much money is required to trade in commodities. So capital kitna chahiye? There is somebody called Shalabh Gotwal. He has asked.
See, that purely depends on the risk appetite of that particular individual. But what one should do is, go look at the MCX list of commodities and the margins. But as a retail investor, I would encourage market participants to start with minis, mini contract of gold and silver. So that is quite active and quite liquid. At the same time, the exposure is not that big. So for that, I think the margin is lesser than 5 lakhs is my understanding, but it keeps changing depending on the volatility. The margins also keep changing. But also, keep sufficient, money as a buffer for MTMs. So if you are able to do that, I think anywhere between 5 to 7 lakhs would be ideal. Would be the most ideal. But it's up to the client's risk appetite. If you want to leverage more, if you want to look at higher leverage, then it's absolutely different. But to start with, I think minis are the most ideal.
So mini contracts are something, if you suppose want to start with even say 10,000 rupees, you can start. There are silver micro contracts available. So if somebody wants to learn how to understand and trade commodities, as Mr. Gyanshekar rightly said, minis or micros are good contracts. So their minimum margin requirement can be as low as 10,000, even lesser than that.
So let me take that crude oil question, Jay.
Yeah, sure.
See, as far as indicators are concerned, because I also use TradingView, I use a lot of other charting techniques. You can actually, using a certain feature called back testing and optimization, you can actually find out which indicator suits which commodity the best by just doing a historical audit of how it behaved in the past. So I'm sure your team can help in identifying that, Jay. Somebody who is very good at charts and TradingView can use this feature and find out. So I'm sure in your platform you must be having it.
Sure. So there's one more question, from Venkat. What are the best sources to track commodity prices, especially when markets are closed? That is on weekends and holidays.
Yeah, to be honest, I don't track markets in the weekend at all because we're like completely engaged right from morning to night. So weekends are the best. We don't go anywhere near the screen. Get a kick from my wife if I do that. So ideally, you don't need to watch. But then if you're interested, if you want to get more knowledge on markets, there are lots of websites that give information these days. And I would recommend investing.com. Which has a wide variety of commodity-related information, quite authentic sources that they take it from. Not like any other website which has too much of fake information that comes, too much of individual interpretation. So this is much more authentic. I would say investing.com is one of the best. But we have so many other websites also. But my recommendation is investing.com.
Okay. I have one question here for you. Like say weekends is fine, right? But on weekdays there are lot of data which keep coming, which impact commodities and in turn equities next day. So can you suggest some key data, which one should keep track of?
See, the most important data that one should look at as far as commodities are concerned, you have to first of all segregate it into non-agri and agri commodities. So let's keep agri aside for now, in case we don't have agri futures much. So in non-agri, the metals, energy pack, and precious metal pack. These are the three important segments, and all the three have a very common connection, which is the dollar. The movement of dollar has an impact on all these three markets. Maximum impact is felt in the precious metals, medium impact is felt in crude oil, and minimum impact is felt in metals. So tracking what's happening in the dollar is the most critical part for understanding commodity price movement. So when you look at the dollar, there is so much of data that comes, but the most important one is the non-farm payrolls that come once in a month. The first week, Friday, is when the non-farm payrolls come out. The non-farm payrolls is nothing but the number of jobs that have been created in the US. So that indicator is very crucial to understand whether the Federal Reserve will increase interest rates or decrease interest rate. And then you now the market's flavor is inflation data. So what is happening to inflation in the US? So those numbers are very important. Then you also have the manufacturing data that comes. So a whole lot of data that comes, but most important data to look at is the non-farm payroll data as far as the dollar is concerned. Now, the individual data for commodity in precious metals, it is largely the dollar only. Very, very few instances where our Indian demand goes down that impacts the international price, or even the international demand that goes down. So demand supply of gold and silver is not going to have any impact on the prices. It's only the external markets, which is the dollar. Now for crude oil, it's different. Every week there is a data that comes out on Wednesday, which is the stocks position in the US, the crude oil stock position. So that data is very closely watched as far as crude oil markets are concerned. So that gives you an idea of how much of crude oil stocks are there in the country, whether it has gone down or come down. So based on that, a lot of fluctuations happen. Similarly, for natural gas also, a certain data that comes once in a week. For metals, you have a completely different set of data. So for metals, markets mostly watch what's happening in China, the manufacturing data out of China, the consumption data out of China, how much China is importing, one of the largest consumers. So these are the key things that one should look at. But apart from that, there are so much of other information that keeps coming from time to time. But what I just mentioned are the most critical ones.
So we have one more question. It's how to take delivery for contracts in gold or silver.
How to take?
How to take delivery for contracts in gold or silver.
It's easy, if you buy, let's say, gold and silver with the intention that you want to take delivery, then all you need to do is just keep quiet, need not square off the expiry date. Automatically, you will be given delivery. So if you're asking for what is the procedure, then I think the exchange will take care of that delivery, and it will be allocated in a certain delivery center near you. Then you can go and collect it.
Yeah, just to
normally,
add.
but normally people don't take deliveries in an exchange, because the exchange is meant for price risk management, and it becomes much more costlier to take delivery here compared to the physical market.
Yes, yes. So there's one more element involved, when you want to take delivery is having a GST number.
Right.
Right. So most of the individuals in India, they don't have GST number because most of the companies generally have it. So for that reason, on Dhan we are currently not offering any kind of delivery based trades in commodities. So there are a lot of regulatory things, lot of paperwork, lot of GST related stuff is involved. So it becomes tedious for a retail client to go through all those pains in taking a delivery. So we'll take one more question, one last question, Shraddha, then we can wind up. Yeah.
So we have one last question from Mahesh. Is asking for crude oil and natural gas, which is a good indicator.
Uh, See, there are definitely lots of indicators. It's very difficult out of a big list of, let's say, 100, 150 indicators to choose one and say this is the best. It largely depends on what is your time frame and horizon also. If you're a short-term trader, then you look at different sets of indicators. If you're a long-term trader, then you simply follow a completely different set of indicators. So first of all, we have to be clear what is our time frame and horizon. So based on that, you do back testing, the optimization, and find out which one suits.
Hi, can you hear me?
Yeah, we can. Yes.
All right, great. I think we are done with all the questions. Okay.
Shraddha, I just wanted to say like there are a lot of feedbacks and requests I can see in the comment section. So we are noting down all your feedbacks and requests and suggestions, and we'll evaluate on our product meeting with tech, and we'll try to incorporate all of them. Okay.
Okay, all right. Thank you so much, everyone, for joining in. We hope it was insightful for you, and thank you, Mr. Gnanshikar. It was really amazing, to learn about commodity trading from you and Jay. So hopefully, we'll keep doing more of these for Dhan's users.
So thank you so much for taking the time out. I think we hope that in coming times, we can also have a physical one-on-one podcast in our office itself. Yeah.
Thank you, Jay. Thank you, and all the best for your done platform. I think you're doing a great job. I can see that. All the best, and thanks, and
Yeah.
God bless.
Thank you.
Thank you. So, folks, I'm just dropping in all the links to our platforms, the blog, and our community. So, if you have any feedback for us, please write to us on our community. We are very active there, and we'll make sure all of your queries are answered. And you can also find this webinar live on YouTube as well. The recording is available for you to go back to it if you want to learn more. Thank you.